Delta has achieved a fantastic set of results for the financial year ended February 2016. Some of the highlights in the business includes our 8% distribution growth amidst tough market conditions, the conclusion of the 1.255 billion redefined portfolio, which goes a long way in reducing our LTV gearing from 47.2% at year end down to 42.3%. 83% of our debt is hedged excluding revolvers, and this was accomplished by interest rate swap agreements of R1 billion that was concluded during the financial year. From an income statement perspective, the growth in contractual revenue was derived from a combination of existing weighted average rental escalations of about 7.84%, together with acquisitions which contributed a further 16%. Our net cost to income ratio increased marginally by 2%, and this was primarily impacted by new acquisitions. Finance costs in the business have increased in line with the increased market rates. Our average cost of debt increased from 8.1 to 8.75%. Management is very cognizant of the increase, and accordingly, we've entered into the R1 billion worth of interest rate swaps at an average rate of 8.1% to hedge this position. This improves our fixed profile from 1.97 at interim to 2.13 years at year end. From a debt perspective, our overall debt in the business has increased by just over R500 million. This also driven by a combination of acquisitions performed during the financial year, together with proceeds from disposals used to pay down some of the facilities. Assets held for sale, the business has got quite an aggressive program amounting to 1.4 billion. At financial year end, we've concluded about 551 million rand of this disposal value, with the remaining expected to be concluded within this financial year. The proceeds from disposals, as alluded to earlier, will be utilized to either be deployed within yield accretive projects or used for the settlement of debt. Property, our investment property portfolio, which is the heart of the business, increased quite significantly. We've seen a 1.6 billion uptick in our total property value, and that has been driven by a combination of initiatives. The largest part of that initiative being acquisitions of 1.1 billion concluded during the financial year. We've expended 300 million rand on capital projects, and we've seen a fair value uptick in the portfolio of a further 300 million. And holistically, I think the next financial year is expected to be very challenging amidst the market conditions, rising interest rate environment. But we at Delta believe that we would employ the correct initiatives to ensure that we achieve on our committed distribution growth for next year of between 7 to 8%.